Ladies and gentlemen, and the first day of the Denver Gold Forum, the European Gold Forum of the Denver Gold Group here in Zurich. And with me now is St. Andrew Goldfields, producing company, very interesting company. And it's Jacques Perron. He is the president and CEO of the company. And yeah, we are curious what he has to tell us about the company and what is going on. Jacques, thank you very much for taking the time.
Thank you.
First of all, you are operating in Canada, in the Abitibi Greenbelt.
Correct.
Yeah, and so what are you doing there? What is St. Andrew's Goldfields about?
Well, St. Andrew is a junior gold producer, and we own a significant land position in the Timmins Gold Camp in northeastern Ontario. So we're the largest landowner for gold exploration in the Timmins Camp. We have about 60,000 hectares of ground in the area.
That's a lot.
Which is a significant land position. Yeah. On top of one of the major gold structure in the area.
You're operating the Holloway mine and the Holt mine and mill. So what was the achieved production last year? What was the development last year with those two sites?
We currently have 3 mines in operation. We have the Holloway and Holt mines, which are underground mines.
Yes.
And our central mill is located at the Holt mine. And not too far from these 2 mines, we have a small open pit mine called a Hislop mine. So between those 3 mines in 2012, we produced just over 95,000 ounces of gold. We started our production in 2009 with the Holloway mine, and that year we produced about 19,000 ounces of gold, and we increased to over 50 the following year and 95 in 2012. So our production is growing, and for the last 2 quarters of 2012 we were at the run rate of about 100,000 ounces per year, which we repeated again in the first quarter of 2013. So this year we're on track to produce between 95 and 105,000 ounces.
Well, sounds very impressive. So you are on a good development path, steadily rising. That's always nice, because a higher production means also normally lower costs. And so what is the overall cost situation, and also in the light of the last 3-4 days when we saw gold at $13.40 and silver $22? So what are your total costs, and can you survive with that?
Yeah, well, I think we're in a very good position compared to many other junior producers. Last year, we started to generate net free cash flow in the second quarter of the year. So we're one of the rare Canadian junior producer generating free cash flow. We started the year with $17 million in bank, and we finished 2012 with $31 million in the bank.
It's very comfortable, I would say.
So we have a good cash position, and we've been able to grow our cash position last year. So our costs, our operating costs are about $920 per ounce, but compared to other junior developers and producers, we have very low capital costs per ounce, which gives us the ability to generate cash flow. This year, in 2013, we're forecasting our total costs, so operating plus sustaining capital plus exploration plus G&A, to about $1,350 per ounce.
Okay.
So at the current gold price, we're okay. In fact, and we have still the ability to trim our costs a little bit. So we think we can resist a period of lower gold prices.
Do you have any byproducts?
We have a little bit of silver, but it's very minor as far as production, so we're mainly a gold producer.
Okay. Coming to the Advanced Tailor project, I read about it. I think that's probably maybe your next project to take into production. What is the status there? What was the development the last 6 to 9 months?
Well, we made the decision in 2012 to go forward with the Tailor project. It's a project that we've been studying for a number of years. And we started to dewater the old mine. There was an old mine at that site, so we dewatered the old mine last year, started development in July, and we're presently developing the main ramp to take us to the first production horizon. And we believe right now we're going to be in production in the second quarter of 2014 at Tailor.
Oh, that's pretty soon.
That's in about a year from now. And with the addition of Tailor, that's going to give us the ability to increase our production by 25%. So we'll go from about 100,000 ounces a year to 125,000 ounces a year.
And still at the same cost, or will the cost then decrease?
It'll be about similar costs. The advantage with Taylor is we pay royalties at our projects, and we have different royalty schemes at the existing mines. Taylor is a lower royalty cost, so it's going to lower our overall royalty cost per ounce. So it's going to help a little bit on a cash cost per ounce basis.
Coming to also first of all, before I come to the exploration, I want to know, can you finance the whole stuff out of your cash, or do you have to raise money to bring Taylor into production?
Currently, to bring Taylor in production, we don't need to finance. We have enough with our internal cash flow and existing cash position to take Taylor to production. So we're not, at this time, we're not looking at any financing for 2013 or 2014. So we're in a very good position for a junior gold producer.
Yes, and you're debt free, of course.
Correct.
Yeah, it's very comfortable, I would say. So that sounds excellent. So coming to the exploration, let's say for this year, what are your plans? I'm sure you want to raise the life of mine, you want to replace the ounces you have produced so far. What are you doing there?
Well, I think if you look at our track record, which is very good on the replacement side, we have been able to replace year after year our reserves. Last year we started the year with 711,000 ounces of reserves. This year we're starting with 735,000. So we replaced everything we mined and we added a little bit. So our programs are very focused. They're near our existing operations and they're targeting areas where we believe we're going to have success. Already we have very good results from our exploration program. We spent last year about $8 million. We're going to spend the same level amount of money this year, about $8 million again this year. And we're targeting two areas in particular, just east of our Holloway and Holt mines. We have a couple zones where we have very good results there. And we're also targeting northwest of our Islap open pit, where we have issued a number of press releases with excellent results. So we're very confident we're going to be able to develop additional resources and reserves over time.
And also it's excellent that you have a replacement rate of 120% almost. So that's like in the oil business. You always have to replace a bit more.
Well, I think it's for us it's important to keep our level of reserves at 700 to 800,000 ounces. That if we're producing about 100,000 ounces a year, that gives us like 6-7 years of production, which is not bad. And it's typical of mines in the Canadian Shield, especially underground mines, where every year you replace what you've been mining. There's a number of mines that have been in operation for over 20 years, 2-3 years of reserves at any given time. So it's part of the process of replacing reserves.
So it's a normal business.
Correct.
Excellent. What is your view on the last 3-4 days on gold and silver price trading? Wasn't that mad?
Yeah, it was a big decrease in the price. But I think in every bull cycle, and if you look back, we see these periods where volatility is high and we have dips in the prices. We're still very confident that the price is going to continue to do well over time. It's a tough period right now, but we see the future as being very bright and good for gold producers, and so we're still optimistic.
As long as they print money.
Correct. Correct.
Wonderful. So last question. Well, obviously you bring Taylor you bring the Taylor project in production, so you need the money there. But do you have in mind to reward your shareholders by dividends, by buying back shares in the future?
Well, it's always something that we have on the agenda. We always look at the possibility of putting in place mechanism to reward the shareholders. At this time, because of our program of developing new mines, we're not contemplating a dividend policy just yet. But as soon as we get into a position where the cash is coming in and we have a better control on our production in the future, we will definitely look at it seriously.
No, that's good to know. Good to hear. And last question: why should somebody invest in your company?
Well, I think
beside the low valuation.
I think beside the low valuation, I think the fact that we demonstrated, I believe, in the last 5 years, our discipline and our approach to developing projects. We're one of the only company that is generating free cash flow, which is, I think, is something significant in the business these days, because we hear about stories where company develop projects but have to take write-downs later on. We haven't done that. We have a good track record. We're good operators. We know how to operate in this camp. We're in a very safe jurisdiction. But I think on top of all of that, we've been able to put together over the last 5 years a very good team, a team of operators, people that understand these underground mines, this context, and I think that's tells you a lot about what we can do and how we can develop the company in the future.
Wonderful. It was a nice closing sentence. Thank you very much. We wish you all the best, of course, and keep it going and bring Taylor into production.
Yes, thank you very much.
Thank you. Ladies and gentlemen, that was Jacques Perron, the president and CEO of St. Andrew Goldfields, not St. Andrews, that's the golf course in Scotland. And you heard it, very good company, very good track record, experienced management team, and they are very good operators. And we will see the fourth mine then coming on stream. We look forward to that. And we will watch the company for you, and you should watch the website of the company. Thanks. That was it from Zurich. Bye-bye.